Hey guys, welcome back to my show. It's a great day today, nice and windy, and yeah, I'm glad you guys are back. And today's show, I kind of wanted to go over some important lessons for trading. But starting out, we'll just do a quick overview of the market. So, market stands at 204 billion market cap, so it looks like it's right back down to the 200 billion level, and there does not seem there's like anything else that's stopping it from going below 200 billion, to be honest. I really think this is gonna end up going to a level that is probably gonna be here. Let's take a look right now where the trend is at. So looking at the Bitcoin dominance and the market cap. So just looking at the market cap first. So right now we are at, so just kind of zoning into the short term. So let me just quickly, whoops, there we go. Yeah, so it looks like we're essentially at like a new low. We're retesting 193. We're probably going to do that. But I mean, where do we see the next low? Let's just say theoretically it breaks through the support. Where would we see the next support at? So let's just kind of look at the entire market again as a whole. So it would definitely not be anything over here because there's no low here. So somewhere over here would essentially would give us a better idea of where supports are. So if we're at the next low that it would retest, highly likely that it will at 193 billion, then well, this one looks pretty good. So I would say, around 175. The 175 level looks like it would be the next support. And if it breaks down there, then there's not much in the way of it going to 160 and then eventually back down to 100 billion. But I don't see this ever happening back down to 100 billion. I would say, I can see it going to 160 lowest, and then probably just kind of range bounding here until the bull run starts, which will probably not happen, as I mentioned, within probably not until next summer. I know that sounds really ridiculous, and this channel is about keeping it real. It's about being a good trader, and it's not just about when bull run, when Lambo, when whatever, right? So a lot of people, they're getting frustrated. They're starting to trade on BitMEX. They're leveraging. They're losing money. They're not being patient. I mean, honestly, even holding on like a negative 95% position is better than trading on BitMEX, in my opinion. There's not really a single person I've met who's been profitable on BitMEX through like time. So I just don't see BitMEX as a place to trade, because I've seen some of their charts, and their data feed is really interesting, because they if you look at like some wicks, they kind of just like randomly, like boom, it'll like I'll be all the way up here randomly. But if you look at Bitcoin's price, it didn't do that. And then you see like random like crashes down, and like randomly, just like liquidating people on their stop losses. And I think the way that they've embedded an algorithm into their charts, saying basically trying to make it so they end up winning. The house is always going to win, and that's how they've said it. And these are my opinions. These are not I'm not trying to chirp their platform or say anything bad about it. I'm just saying how I feel from my experience from other platforms. I've traded Forex, and CFDs, and they're very similar to that. So yeah, guys, it's really important to, if you're gonna trade Bitcoin, just raw Bitcoin and use leverage, that's cool. But if the price action and the price feed is not even actually Bitcoin's price feed, then that's an issue for me. Like, I don't like how it just randomly there's jerk reactions and it's liquidating people. Like, it's just stupid. It's obviously that they made it so their platform would make money in the long run for themselves. So I just don't like to get involved in that. That's my opinion. So anyways, moving forward, so yeah, guys, it looks like we would probably be sitting at a 165, 160 support in the long run, in the near term, if it keeps going. I do think it will. I think we're looking at definitely 5,800, I'd say, but who knows? And we'll see. So yeah, moving forward, I did want to talk about some trading lessons, and this website I use, learntotradethemarket.com. They have some very nice articles, and I've been using these guys ever since I started trading, and it's really helped me. And I just thought, I'd share this with you guys and kind of explain what he means. So just starting out, number one, being a defensive-minded trader. And what does that mean? Okay, so a defensive-minded trader is a person who isn't always looking for trades. They're waiting for trades to come to them. So you want to be a person that is in anticipation. You're like, if you really had to put it in an analogy, you're essentially like a crocodile that is just waiting in the water and waiting for the trade to develop and for you to go in and just make your entry. So this is something that's very hard for people to do and very easy to say, but a lot of people, they're just like trying to like catch every move kind of thing, and like trading like 5-minute charts and like trying to get every move, and it's just ridiculous, and it's not good for your mentality, and you're gonna lose money, I can assure that. So yeah, guys, it's definitely key to look for quality positions, and don't just like always try to like force trades to happen. If you're really trying to force things to happen and you're just trying to get in everything, your account's going to go to zero real fast. And that's just what I feel, and that's, it really is true. And he even says it himself, right? The way you achieve long-term consistent trading success is by being defensive in your approach. And that means you only trade when the market conditions are right and when all your trading plan criteria has been met. So that's the thing, right? I mean, if you can just kind of like freestyle every single trade on the fly, then there'd be a lot of people rich right now. They'd be like, catching every single tick in the market, but that's not how it works. And the market will beat you up and spit you out if you do try to do that. And that's just how I feel. If you feel different, you could definitely try it out, and maybe you can be the number one trader in like micro movements and like high frequency trading. I mean, when it comes to that, you're obviously using like algorithms, and like it's different. But if you're trying to manually do this like emotionally with your own mind, it just doesn't work. So moving forward, watching charts and monitoring trades will actually hurt your results. Absolutely true. I see people on like Twitter every single day, like every single candle it closes, and then people are like, oh my god, did you see that candle? Like, holy shit. Like, oh my god, we're going to the moon. And like, it's just ridiculous. And that's what it just like mentally exhausts people, and it just ends up making you like quitting trading, and you just end up like, it just ends up bad, and it's just like, that's how people get completely worn out of this field. And that's important. Like, you can't just be like looking at every trade and like trying to like look at every single candle and see how it closes and stuff like that. Like, it's just not good, like long term. Like, nobody does that, and I would not suggest you do that. And if you are in a trade and you're trying to, you're like, oh my god, like, where is it going? Like, I gotta look. You need to be disciplined to just not look at the charts like every day. You need to just get in, set your stop loss, and let the market work for you. I mean, I'm sure, yeah, like you should check like, every like 3-4 hours, I would say, just to see, like if your position is heavily in your favor, then you could perhaps, bring your stop loss to break even, and then you can just, let then you're essentially in a riskless trade, right? So that is good. And the biggest thing though is just, when you are in trade, like, let it do its course. Like, don't get so like over fidgety and like, move the stop loss again, or like, you know don't like try to average down again or something just because your trade's not happening to your favor and stuff. So yeah, guys, I mean, that's just like how I feel. The next one. The results of your last trade should not affect your next trade. Absolutely. So if you're trading a current trade and it was a loss, don't let that affect your mentality. I mean, don't think like, oh my god, like I'm cursed, like if I make another trade, like it's gonna go bad and I'm gonna lose. Like, people do, it does happen, and it's important that you don't let that affect you, right? So you need to always stay objective and be emotionless, and that comes with time, and that also comes with good risk management. If you're like risking a shit ton, then it's just hard to stay objective. So you need to be trading with a reasonable amount of money, and like not like so much, and not just like, trading your like life savings and like your life depends on it. So winners and losers are random, and that is absolutely true. You can't always like, go for a winning trade. It just, nobody has like 100% track record for trading, and if anybody does say that, bring them to me, and I tell you they're bullshitting. So all the best managers, they lose trades all the time. It's not a big deal. The winners and losers are random. You can't just, even though it may look like a great trade and you are in it, which is fine, but don't get so like caught up like, yeah, like I'm definitely gonna get my profit, like I got this in the bag, like, or else it ends up affecting your entire objective state, and you don't want that, right? So and also, yeah, this one here, be extra careful after a big winner. This is so true, because if you do have a big winner, it's important to just like go and like golf, or like go like do something else. Because if you're like right after a big profit take and you're like trying to get right back in, most of the time you're just going to give the money right back into the market. So it's really important that you're just like, really important that you just, shut off your laptop and go away. I mean, he even says it, traders often become overly fearful after a losing trade and overly confident after a winner. Now let that sink in. So when you're making money, I don't know, like if you guys have, I'm sure a lot of you have traded before and you guys understand this. So but if you're making money and your position's good, your next trade you feel invincible, like you feel like you're gonna win and stuff, but it just doesn't work like that. But your like mind tricks you into thinking that way, and you just can't let that happen. And even after like you lose a trade, you don't want to just be thinking, oh, I'm gonna lose another trade, like, oh shit, I'm cursed. It's not you. It's just, you just gotta, just not be as emotional. That's all. Massive. Doing less will actually get you more. So true in crypto right now, because there are so many traders right now on BitMEX that are trading and losing money, giving their money to Arthur Hayes, and I'm not about it. Like, I wanna make money. Like, fuck you, Arthur. I wanna make money, bro. Yeah, I wanna go on CNBC. Yeah. So yeah, doing less will actually get you more. So you have to just not trying to like get overactive when it comes to trading. Like, I understand when it comes to like life, the more involved and the more effort you put into something, like the more you get back. But trading does not work that way. It absolutely does not. You have to just let the market do its thing and use the market as a tool to make you money. You don't just like, are trading like every single candle. Like, it's just stupid. Like, it's just like, people need to understand this, and that doing less will actually get you more. Like right now, if you're just like, I bet like most people who are holding bags right now from like January are probably have more money than people who sold their bags in losses and started putting their money into BitMEX and probably have like nothing right now. So, and there's so many people that are in that position, and it sucks. And honestly, like if you're down 90% on your position, just keep holding it, to be honest, man. Like in a normal state, like I would say probably, like get out. But I mean, 90% is essentially, your entire your entire position, right? So you may as well just hold it through. Like, do people actually think they're gonna 10x back into a bear market? I'm not saying you can't, but the probabilities of that happening are really really low, and also the probabilities of you losing more money are probably higher. So if you kind of wrap your head around every single lesson here, like, because like you're gonna, if you're trying to just like do more and more, you're just gonna lose more. You're like trying to force trades, and it just doesn't work out in the end. So low frequency trading is definitely the way to go, in my opinion. I'm a low frequency trader. I don't trade often. I would say the most successful crypto trader right now would be someone who like ideally like sold at January and like bought possibly now, or within the next couple months when the market really does bottom. I don't know, but definitely someone who has sold at January and it hasn't gone in yet. So, and that means they're low frequency trading, right? So they wouldn't have been getting back in for like 8 months. And this is huge, guys. A hedge fund trader controlling millions or billions in money is not thinking about trading constantly, right? So this is massive, right? So you want to trade so for example, like if you're trying to play basketball, you're obviously gonna like follow LeBron James, how he plays, how he manages certain situations, and you can kind of emulate that, and that's cool. But with trading, it's so true. If you can kind of like follow like the trading style of successful traders, there's no reason why you wouldn't be making money either. Also, just a fact, guys, the best traders in Wall Street are right on their trades 60% of the time, and only 60%. So that means they're letting their money management and they're managing money in a way, they're managing their risk in a way that in the end they're still profitable. So just something to consider. Know where you're getting out before you get in. This is huge, especially for a lot of crypto traders that are holding through the next bull run. Guys, whoever didn't take like any profits like at all, this is huge for you, because the exit is much harder than the entry. So it's very easy to get into a position, getting into crypto. Everyone's made that very easy, but to really think about when you're gonna get out, have a plan. Like feel like, okay, like if you're kind of just going off of like, oh, like I'll just kind of like decide when it does, then you're probably going to let emotion take over, and you're probably not going to get out like ever. So you need to like actually pick a certain number, right? Like, I mean, either pick a number, like, okay, if it's at this number, my coin is at 1 penny right now, but if it goes to 20 cents, I'm going to get out. I don't care if it's like at 18 and I can see it going to like 30 the next day. Like, no, just like get out at 20, like, so just something to have. Like, you cannot just like, I wanted to actually say this, so most traders exit based on emotion, but also they don't so like usually what happens with traders is when they exit a position, they either exit it in a big loss or a small win. Now let that sink in. Most traders get out of positions either at a big loss or a small win. So when there's a small win, people get excited and they're like, yeah, and then they just like take the profit and whatever. Or some people, they don't get out until it's like 90% out, where most people now are doing. So like right now, like how most people got out and are trying to trade on BritMEX now and trying to get their money back, like it's just stupid. And they got out of their current bags, their positions, because of emotion. This is huge. So just something to consider, guys. It's really huge. And this would be really, this is true. I mean, be out of the market much more than you're in. So if you were to have gotten out in January at the peak of the bull run and like got back in, then like you really didn't really get into crypto. Your position was not in crypto for that long, because you'd be holding cash for the last 8 months, right? Just something to consider. This is also big when you're looking into like understanding when to get in. Daily charts are huge when it closes. Everything below that is like meh. But even daily charts though, to be honest, daily charts aren't as good as they used to be. I feel like these algorithms that move Bitcoin or whatever, or like the people moving it, I feel that like daily charts don't really work that well. I know you'll hear that a lot, that they do and stuff, but I mean, for example, you look into, okay, so we'll go into a daily chart here. So can anyone explain to me, like, if they saw this candle where my cursor is, this candle, could anyone have known that this massive dildo red candle would have happened the following day after this candle? I really don't think so. I mean, this one's like a hard one to really even tell too. Like, I would have expected like maybe like a really small candle or something to just happen right next to it, like a red one maybe, but clearly not. And then the next day again, and the next day, it's a pretty good wick. So yeah, guys, just something to consider. Like, you like, technical analysis is cool, but it really doesn't help that much, especially with crypto. I think it's a fallacy. I think technical analysis is good sometimes. Like, yeah, guys, that's just preference, I feel, depending on what kind of trader you are and what your strategy is. So the other one I wanted to talk about was, can you fall asleep soundly at night? Well, this basically concludes to, did you risk just enough where you don't care that your money is at risk? Because if you're like risking like your life savings, then you're probably not sleeping that well, and you're probably like constantly checking your charts, and it puts you down into that rabbit hole, and then you're just gonna end up like either taking a loss, or you're gonna end up like taking a quick profitable position out. So just like something to consider, guys. It is huge. And this one's big too. Know what you're doing before you start trading real money. So essentially what this means is have a strategy, understand, okay, so I'm getting in now. My strategy is essentially holding this coin until it reaches 20 cents. And okay, so let's just say it doesn't. Well, do you have a plan? Like, well, what is your plan? Like, let's just say it never does. Or let's just say, like, you get impatient, like, or like you set a timeline. Okay, in 4 months, if it doesn't reach it, I'm going to take profits at market price. Or, if it doesn't reach it at in X amount of time, like, I'm going to do a certain thing. So yeah, just like trying to like plan your trade. It allows you to stay objective about your trade, and you're not just like kind of on the whim thinking, because that usually converts to emotion-based trading. This is like the biggest thing I would say. Have you mastered yourself? And if not, you need to. So what this really means, guys, is You need to be the type of person that would be a good trader. A good trader or investor is someone who is very disciplined, who understands themselves, who understands their emotions, and understands how they think. So that way, you automatically have an edge because you know, like, there's certain, the market makes you feel a certain way in certain situations, and if you know yourself well, you'll know that the market is making you feel that way, and don't let yourself feel that way. So I mean, the best investors and traders, for example, like Warren Buffett, extremely disciplined guy. He reads the newspaper every morning, like little things, right? I mean, it's like being a good trader isn't actually even about like trading itself. It's about like developing that personality. Like, you know, like, are you that person who like consistently with discipline, you know, wakes up and goes for a jog, or you know, whenever there's dishes on your table, like you're always cleaning it. Like, you need to be this person that's like, you know, very that conducts themselves in a very self-mannered way, that you're very cautious with your actions, and you're not just kind of like, you know, chilling, like, the because I feel like media and a lot of traders and like Instagram and shit, they like flex their Lamborghinis and stuff like that, but like really it's like they don't know shit about trading, and it's like people think it's just about like, you know, getting to that like Lambo and stuff, and it's just like, it's cool if you have that goal, like, you know, I don't mind that, but I mean, like, really, like, that doesn't make you a good trader. You need to be like very consistent with your thinking, and having a game plan. Yeah. And yeah, the last one was Confluence is King. I don't really agree with this, but really all it means is like have a trade entry system. So it really all depends. Like have like an indicator for yourself. Like if this and this and this happens, that means I'm getting in. So for example, this guy, he follows TLS method. So you need to have 2 out of 3 of these for you to get into a trade. So the trend needs to be going into your favor, and also the level meaning like the support or resistance it's at, and the signal meaning like pin bar, like a candle pin bar or something. I don't really believe in this, especially in crypto. I just don't feel that it's something that will allow you to be more consistent. So that's just how I feel, guys. But yeah, so let me know how you guys found this video. Let me know what rule you guys like the most, and yeah, hopefully we will meet again on the next video. And comment, like, and subscribe, and see you guys in the next video. Cheers.